there'll be more people to come. Hello, everyone. Is my mic working? You can hear me? Okay, great. Welcome, thanks. I'm sure there'll be more people coming in. This is what happens when you schedule a session at 1 o'clock, right in the middle of Francophone lunchtime. We were told that yesterday by someone, said, love the conference, but 1 o'clock is not the right time to start a session. But of course we have to, because there are trains and planes and we have to work backwards from there. So thank you for being here on time. My name's Sam Mendelson. I'm Financial Inclusion Specialist at EMFP. I'm the lead author of the Financial Inclusion Compass series, which is EMFP's annual survey of sector trends. You've perhaps seen hard copies lying around the place. There are some on the back table if you'd like to grab one after, and we'll talk more about it. I'm delighted and quite proud to be here with Sophie Sirtaine, who needs no introduction. She has more than 20 years experience at the World Bank, where she's held various different positions: Director of Strategy and Operations at the IEG, Director for the Caribbean region, and she is, of course, CEO of CGAP now. The idea of this session today is that hopefully you can get two things out of it. The first is to hear some of the results and the themes of the latest Compass, which we've just launched this week, basically today, this is it. And it was based on a record number and diversity of respondents across the financial inclusion sector. And secondly, you get a chance to hear what the CEO of a sector critical, very important organization like CGAP is thinking, what she and her colleagues are thinking, and how they see the trends, the challenges, and the opportunities ahead in the sector. So this is how we're going to do it today. This is I'm going to start by presenting a few short slides to give you a feel for some of the findings and themes of the Compass. And then we're going to hear from Sophie on her thoughts, a response to some of those. And then we're going to go more in depth on about four broad categories, particularly client and household resilience, the persistent and widening gender gap, the power and risks of data, stroke client protection, and green and inclusive finance. There will be plenty of time for questions, and unusually, as you all know, the orthodox way is that we leave 15 minutes at the end for Q&A. We'd like to do it a bit differently, if you're up for it, and we both are, is if you'd like to ask questions during, so when we're talking about a particular thing, put up your hand or cough or shout, and we'll try and just take them as we go, okay? We're both very happy for this to be a lot more freewheeling. It's called a fireside chat rather than a panel. And for the online audience, the same thing. There is someone monitoring. And so if you put it in there, my colleague at the back who's monitoring will try and pass them on. So I'm going to go fairly quickly through this, but we'll have a chance to go deeper if we need to. So the Compass began in 2018. This is the 6th edition. It's a mixed methodology survey of various stakeholder groups' perceptions of trends, future priority areas, challenges, and opportunities, with a couple of rotating questions that come in and out each year. This year, we had a record number of respondents, 185 from 58 countries. So these are individual people, and I'll show you the distribution of what type of people we're talking about here. I think many, some will be in this room, there will be some at this conference. Section 1 of the survey presents a list of 20 current trends. This list changes a little bit year to year based on feedback. They are presented in randomized order to each individual respondent, and they are asked to score them on a scale of 1 to 10 of how important they are currently in the sector, and they can add optional comments to any or all. Section 2 is called Future Priority Areas. This is a list of 15 areas that are, and we ask respondents to speak subjectively and to speak in the medium to longer term future, which we define as 5 to 10 years down the track, to where would they like to see more priority given, right? What's important, what should we be doing in the medium term? And again, comments. And then there are rotating open-ended questions. This year, there was one on challenges and opportunities, one on what 3 or 4 years on, what is the legacy of the COVID pandemic on the sector? And third is what would you like to see as future avenues of research? Where are there gaps in research? This hopefully that is clear enough for you to see, is the distribution of the respondents by organization type, which is the first question they ask. You can see there that there's a bit over between a quarter and a third are support providers, the same percentage are FSPs, and then there are subcategories, banks, NBFIs, people who work at NGOs and the like, funders, researchers, infrastructure organizations, which are organizations that EMFP would fall into. These are organizations that sort of we consider to be like the support architecture of the sector, member-based organizations. Arguably CGAP, it's interesting because we do have CGAP respondents, and sometimes they put themselves as researchers, as a think tank, which is a subcategory of research, and sometimes as an infrastructure organization. I think CGAP could quite easily be called either. But anyway, that's the distribution there. And this is by their geographic focus of work. So predominantly, where does that person, where is their work focus? Not necessarily where do they live. You can see there, Sub-Saharan Africa is the plurality, LAC, South Asia, then there's smaller, global, EAP, MENA, and the like. Now, I think that's legible. I suspected the resolution wouldn't be great. So you're going to have to pick up the paper if you can't read it. So this is the ranking of the trends. The current ranks on the left column, the name of the trend, then the average score, and then the previous year's rankings. This is the takeaway. Climate protection is back in first spot for the first time in several years, but climate change adaptation and mitigation has increased strongly to number 2, and with a considerably higher score than previously as well. Following this are last year's top 3, but in a different order, and then a couple of big movers. Gender equity within FSPs is up, and very strongly up from 20th to 7th, and I'm going to get back to this later, is something called new financing instruments. And the reason I'm going to mention it again later is we tweak the wording of the trends each year for clarity, but sometimes the tweak is significant or it has a significant effect. And in this case, we added a prompt. We said for new financing instruments, e.g. green finance, social gender bonds, shot from 20th, dead bottom, up to 7th. So it's probably something to say then about what is important to people. So that's the list of the trends. Future priority areas. No need to go deeply into methodology here. It's not that session, but we put it on an index score of 0 to 100, 100 being maximum importance all the time for everyone, 0 being none. The takeaways here are green and climate smart finance is a very clear number 1 now. And we see a lot of qualitative responses on this and the work of the action group that you heard about earlier this week. Women's empowerment and gender equality is significantly up as well. Financial health is up in score. And there are a few other strong movers, but those are the high level things. Then there are 3 open-ended questions. This is just to show you the word clouds of those. So on the left one is challenges and opportunities. You can see climate, regulation, technology there. Legacy of the pandemic, digital, accelerated, transformation channels. These are, I think, what we would probably expect to see respondents say has been the big legacy. And then where would they like to see more avenues of research, product, services, impact? Those are only illustrative. And just here are some themes. I'm going to go down this list and then I'm going to bring in Sophie. So what can we take away from this report this year? First is that green and climate smart finance is really the de facto theme of the survey, or at least it is so strong, it appears so strongly in every single section that it has become a de facto theme. You could argue that maybe the same is true of this conference. So many proposals did we get when we put out the call that came in on green and climate, so many sessions on the stream. The increasing importance of gender mainstreaming within FSPs, a real recognition that the pandemic has widened persistent gender gaps, that there's an outsized negative impact on women. And there's a lot more work to be done on gender equity institutionally in terms of facilitating women's leadership, but of course in designing products and services that are equitable for women clients. The point here is the one I alluded to before. We're probably, if anything, understating that, because the addition of gender bonds to that shot it up the rankings as well. So client protection has almost become inseparable now from digital financial services, at least among the respondent base. They see the predominant threat to client protection coming from the misuse or the abuse of digital services. Interesting, some concerns about the implications of AI to come on client protection. Threats to household resilience. A lot of talk about the external factors, right? The cost of living crisis, cost of fuel, inflation, which as we know, is regressive always, and the pressures that people are feeling under the threats to household resilience. And that's what we're going to kick off with in a second. Refugees, which, as you heard last night and this morning, is the topic of the award next year, is a theme that is only going to get more and more important, according to respondents. And then they'd like to see more research on AI, on resilience, delivery of non-financial services. So that was a few more minutes than I was planning, but now can bring on who you probably came to hear from. And so I'd like to welcome Sophie on, and can you start by saying, you've been here for 3 days as well as all of us. Is this consistent with the way you and your colleagues are seeing things at the moment? Does this feel right?
Yeah, absolutely. The answer is absolutely. And I think what I'm seeing in those data sets is really, in a way, a continued evolution from a focus over the last maybe 5-6 years on the transformation of the sector itself. You see in the trends still a lot of focus on digitization, new products, new actors, new risk, new forms of offering services, governance challenges, etc. Towards, in the future trends, much more of a focus, which started already, but an increased emphasis on how do we leverage those transformations, this adaptation that's happening in the sector, for generating real meaningful impacts in view of what's happening in the world. And I see, if you look at the trends, I see two sub-elements, or two streams of impact. On the one hand, you really have a focus on the excluded groups. How do we bring everything we've learned to those that remain excluded? And you have last mile access, you have women, you have refugees, you have youth that are cited there. And then the second stream is really around, for all those that we are now including and serving with financial services, how do we create these products that will really mean positive change for them in terms of their climate adaptation, their access to green technologies, in terms of economic empowerment and agency for women, in terms of food security and agriculture, productivity and growth, and SME growth, etc. So I think I see this transformation of the sector and this increased focus on the relevance of the sector in the global context as represented in the survey data. And I think it's great. That's exactly what we should do.
It's increased complexity as well, isn't it? Like we're so tempted to think, particularly at a conference where we have to put things into streams, right, and code them to the siloization of the sector, but of course that's fanciful. They all touch on each other, these issues, so much.
And that's development. Yeah. Development is complex, and I think what we see in today's world is exactly that development challenges are intertwined. Climate impacts poverty of vulnerability impacts ability to respond to climate, women exclusion impacts their ability to cope, etc., etc. So we cannot work in silo. We cannot address one problem in exclusion of the others. We cannot solve one problem and increase another. For instance, we all know that climate change is being addressed by policies, among others, that are trying to green financial sector. But that could create unintended consequences and lead to exclusion from a financial sector perspective, because you could have SMEs that can't be greened yet and that are excluded, or people that are simply too risky to be served. That's already happening, or that can't fill in the compliance forms that are being required at this moment with climate regulations. So you don't want to solve for the climate crisis and increase at the same time the social inclusion crisis that we have. So problems are intertwined, and therefore they require intertwined or combined solutions, or solutions that address them in a holistic manner. And that's, I think, what we're seeing in the industry now.
Well, let's, if anyone wants to jump in on that, feel free, as I said, to those late stragglers. We're taking questions throughout here, so you're not being rude, feel free. Then let's, if no one does want to, let's talk a bit about resilience or lack of, I suppose. And I mentioned the impact of the pandemic, and we've heard this week about the impact of the war in Ukraine on fertilizer prices, and obviously there's an inflationary. Most countries are in inflationary conditions. How do you see the level of precariousness of low-income people, let's say in the last 2 to 3 years versus before?
Well, I mean, it has increased tremendously, and I think we know that for sure because we have data on that.
Is it predominantly women?
It is predominantly women and girls, as well as children. We know that poverty has, the reduction in poverty has been halted. We know that 700 million people are forecasted to still be poor in 2030. We know that inequality has increased, and we know that we are not on track to meet the SDGs in most dimensions. And I think we also observe from our perspective, from a financial sector perspective, that the shocks that clients, inclusive finance clients, are subject to are just increasing in frequency, in
severity,
intensity,
right.
exactly. And also, we see an increased covariance. For instance, when you think about a climate shock, they don't affect one person at a time, but a whole community or region. They also affect the providers themselves. When in Pakistan, the flooding wiped out microfinance institutions in that area. So they compound each other.
Yeah. And then it has implications on food insecurity, as we we're talking about yesterday, which had knock-on effects on people's productivity and investment in education. Right.
You also see, you were talking about the pandemic, and then one thing that is really important to realize is you were talking about women. Women have been retrenching much more than men because of the pandemic, and it's continuing in terms of many, many dimensions. Their economic participation, gender-based violence, access to finance, etc. We're going to talk about that later, but that's a real problem.
You've talked about, you and your colleagues have talked about utility. I read that recently, and we at e-MFP and our friends, and in fact there was a session this week on financial health, a term, and that has become more prevalent in the compass over the last couple of years. And I think we all have a close sense of what financial health is now as the end objective. The components are access and and capability, and all of these lead to that as an outcome. But you've called for a focus on utility at the expense of breadth or depth alone. Is that right?
Well, not at the expense of.
Or that it's a consequence of more?
So what basically we're saying is that building access to financial services, as in including people into having at least a bank account, or even increasing the number of products. So the depth of financial inclusion is not sufficient. We're not saying it shouldn't be done. It should still be done, and we should bridge the gaps there. But we're saying it's not sufficient in that the supply of financial services is not necessarily aligned with the needs of people. And for instance, climate adaptation is a very clear example where we've gathered the evidence to show that. So what you see is that if you have access to a financial account and you need to adapt to climate change, it's a useful starting point, right? You can receive a cash transfer, you can receive remittances, and that may be useful to adapt. But often it's not sufficient because adaptation needs can be really massive for a family. If you have access to loans and savings and insurance, that's excellent too, and that may help. But we've done, for instance, a landscaping of all the financial services in developing countries that are available for the adaptation of poor clients, to realize that there's actually very, very little out there. And this has been one of the themes we've talked about in this conference a lot, because it's very difficult to develop a financial product that really takes into account the longer term period on which climate shocks happen, the counterfactual, the fact that it doesn't generate cash flows, It's more about a
Smoothing.
counterfactual that does not happen, etc. And so we are thinking that, focusing simply on access as a measure of success and as what we want to take into account when we design our interventions is just not sufficient. We really need to focus on the objective that we have, the utility, the impact we want to create. And for instance, in the example I'm giving, we need to help design products and interventions that target specifically the climate adaptation needs of the poor. And if you don't have that in mind when you design your product, it may just not be suitable for those needs to be met. Now, for us, financial health is not an outcome. It is really, at best, an intermediary outcome because it's a measure of short-term resilience. But the impact of inclusive finance is much broader. It's about prosperity, it's about agency and empowerment, it's about longer-term resilience, adaptation, access to green solution, participating in a just transition. I think the problem is that we don't have sufficient evidence at the sector level to really understand exactly what are these outcomes that financial inclusion contributes to. And so we embarked on an initiative to clarify that. So we see financial health as an intermediary outcome, as a desirable, obviously, state of affairs. We want people to feel financially healthy, but we also feel it's a very subjective, very difficult to measure concept that maybe belongs more to the consumer protection.
But so semantically, though, financial health is a precondition to utility, as you would see it?
Yes, exactly. Exactly.
Okay.
Yeah.
In the Compass, we speculate that there may be a half-hidden over-indebtedness crisis out there. We're back on the legacy of the pandemic here, is that it's being masked by opacity and maybe portfolio data, multiple borrowing, or failure of credit bureaus to recognize alternative providers. Do you think that's a real risk, that there is a underlying over-indebtedness bomb? So
in some markets, obviously not everywhere, but yes, I think it is something that we really need to look at very carefully. And it is in a way linked to the very fast speed at which digital financial services in particular have been expanded in some markets, which is positive in a sense, right? We are achieving our goals of offering services to more people, including them, but it is related to many factors that you were describing, but effectively the fact that consumer protection and the way responsibility in the financial sector is being, market conduct is being imposed has not followed up. And so we really think that at this stage, we really need to nearly rethink how we make sure that financial ecosystems are responsible. And we continue to strengthen consumer protection. That needs, for instance, to be much faster, look at social media, for instance, and market monitoring to understand where risks come from faster and earlier. You can no longer wait for a supervisory report. It's too late by that time, cyber risk may have affected millions of people. So we need to rethink consumer protection, but we also need to involve more actors in participating in making the sector responsible, because now financial services are being offered by so many non-regulated financial institutions, whether they're telcos or fintechs or others, and also financial services cross borders today. So risk cross borders as well. So you really need to rethink consumer protection, market conduct, and basically responsibility in the sector, and make it the responsibility of every actor. So we think that coordination will need to be strengthened, competencies and tools will need to be strengthened, et cetera, et cetera.
Well, sort of while we're on that, then, let me put out one of the quotes from the Compass then, and see. It was that there's a sense among some respondents that there's a race underway to keep up with the accelerated pace of largely technology-driven change. And these are now direct quotes from respondents. So this is not me. Access to technology is happening at a faster pace than the pace of building the knowledge among consumers of how to use DFS safely, or the pace of building the new infrastructure we need to make sure DFS can be used safely.
Yeah, and that's correct. And I would add, and the pace at which regulators and supervisors build their own skills to regulate and supervise. So we think we agree. We see this as real challenges, but it is not a reason to stop the innovation, the pace of innovation, because it's helping the poor. It's a reason to really invest in those infrastructure, those capabilities, those ecosystems, etc. But yes, fully agree. It is a real issue.
And then while we're on technology and climate protection, you've advocated for a digital public ecosystem. Can you explain what you mean by that?
Yeah, so that's not just on consumer protection, but it's really around the fact that fundamentally we've seen a number of public investment and public regulatory changes that are creating an ecosystem that is much more susceptible than in the past to enable digital innovations, and especially data-driven innovations, to flourish and to lead to greater financial inclusion. And these elements, however, need to go beyond infrastructure. And so in some sectors, in some part of the industry, we've been talking about DPI as digital public infrastructure. We changed the I to E to say it's digital public ecosystem because you need policies, and consumer protection funds is one of them. So the key enablers that we see that countries should in a way equip themselves with are on the infrastructure side. It's well known. It's a payment system that works, that is interoperable, includes third-party initiation, offers instant payment capabilities, etc. IDs, obviously, connectivity, access to phone, access to internet, preferably smartphone. And there may be one more that I'm forgetting. But we also think that that's not sufficient. If you just have that, you will not necessarily lead to greater financial inclusion. You also need data sharing schemes. Open finance schemes like we see in Brazil can be really transformational. You also need enabling policies for new actors to participate, such as sandboxes, legal framework that allow partnerships between banks and new players along the value chain of financial services. You need strengthened consumer protection, as we discussed. You need digitization of payments, for instance, public and private, that can be a real incentive. And last but not least, agent networks. That seems very simple, but it's so fundamental to make the links between the digital provision of services and cash economy. So it's a whole ecosystem that is needed, but of which we start knowing the ingredients, but of which most are still not in place in so many countries.
Yeah, I mean, we heard a lot about that in the Compass, about the need to strive a balance and catch up, lots of different sort of metaphors for it. But let me put this quote to you by someone we both know in the Compass. We need a combination of voluntary engagement by FSPs on consumer protection practices, regulation that makes consumer protection mandatory, funding to give supervisory authorities the resources they need for the enforcement of regulation, funding for FSPs themselves to invest in social and environmental performance, and then disseminating the lessons learned by practitioners so everyone can benefit. It sounds insurmountably difficult, doesn't it?
Yes and no. I think we
but do you agree that those are the conditions?
Yeah, I agree that all these elements are important. I think it's what is going to be very difficult are to build the coordination that is necessary, because you have many of the entities that need to be involved that are not used to collaborate. So regulators of financial services, we need to start collaborating with telecom, for instance, regulators, or with regulators across the borders, or with consumer protection agencies. And these coordination mechanisms do not exist in most countries. That's one. The second is you need to build the capabilities to understand and leverage cyber data, basically digital data, including by those regulatory agencies. And they usually don't have those capabilities. They still rely on paper supervision reports that come, too late, one customer at a time. And within financial institution, it's the same. They wait for the complaints to come from the ombudsman or from the complaints department, and it makes its way up to the right person to handle, and by that time it's too late. So you need to develop their capabilities, public and private sector, to really understand how to leverage customer data and understand what that means for risk and handle these faster.
While we're in the broader
Mhm.
area of
Mhm.
technology innovation, and then we'll move on to gender in a
Mhm.
minute, but my sense is that the hype on AI and its implications for the sector and the world is overblown, but then I suspect it's that I don't adequately understand the topic. But are you bullish on this? Is it going to transform? We heard Tim Ogden and Scott from Finca yesterday saying there's no doubt this is absolutely going to revolutionize the sector. It's transformational. And I can see faces nodding here. So lots of people agree. But do you agree?
I do agree.
You do agree. Okay.
So for me, this is the most transformational trend that
All right.
that we see, and that will completely change even further than what we've seen so far with fintechs. That's going to transform the sector fundamentally. So I fully agree with that. But I also agree with all those who say it's also the biggest risk.
Yeah.
Not only to the sector, but probably to humanity. But that's another question.
That's 90. Yeah. The split in the Compass this year, as you may have seen, is 90-10 in terms of risk versus opportunity. Yeah.
So I mean, the possibilities are really enormous. What we see at this stage is a number of key areas of financial services provisions where AI is already making a difference, but where I think we've only seen, the tip of the iceberg.
Is that like appraisal stuff, or is this in call center chatbots?
It's a little, well, it's I think it's 5 things. It's KYC.
Yeah.
So it's really bringing people in on the basis of alternative data, biometrics, face, etc., which can be transformational for people who are, for instance, who have disabilities or who are literally illiterate. 2 is what you said, credit scoring, claim assessment. But again, where we've seen only the tip of the iceberg in terms of the data that you can use for credit scoring. And of course, the basics, which is you use digital transaction data, or you use utility payment. But I'll give you an example. There's a fintech in Africa that's using mothers' daycare payment as a proxy for income. Because basically, if you pay for your child to be in daycare, that means you earn at least as much during that period of time. And that's only one key example. Or Uber in Brazil is using data from their drivers' behaviors, which they can show, so speed, neighborhoods, fines that they get, which they can show is actually a good proxy for credit behavior. So we haven't seen the tip of the iceberg there.
And probably their car insurance premiums as well.
Exactly.
Right.
So that's the second. The third is what you were saying, interface, chatbots, client support, etc. The third is fraud handling. You can use the AI to manipulate customer data, fraud data, complaints at a much lower cost. And today in many institutions, you have a threshold under which a fraud is not even investigated because it's not worth it. It's just too costly in terms of the labor costs. So that's going to decrease very significantly with benefits for poor people directly. And the last is obviously operational efficiencies. And so decreasing the cost of services, which can then translate into lower interest rates ultimately. So lots of possibilities, but also lots of risk.
Does anyone want to jump in on that? I want to move to gender in a moment, but does anyone who understands AI well want to say, yeah, please? Can we get a mic over there? Thank you, if you don't. And if you could introduce yourself.
Yeah, Benedict Wada from Consumer Centrics, and we work in, like probably everyone here, in inclusive and digital finance. It wasn't going to be very narrowly on AI, but I think a lot of the topics that you hit on are just because we work both with providers, but also with regulators. And the reality is the regulators are also looking at this in awe. Right? I mean, regulators, I think we had a team from the Central Bank of Egypt who's doing a lot of commendable things. They're really on the front on a lot of these topics. But more typical, these are people who, well, studied macroeconomics 25 years ago. And of course, their core mission is financial sector stability. I think what I really want to encourage everyone in the room who's on the provider side, engage them, because their reflex is going to be, let's hit the brake, financial sector stability, let's not rock the boat. But if we have an interest in putting those tools to work for inclusive finance, that they work for inclusion, then of course we need to engage them. And also do a little bit of housekeeping, because you've highlighted consumer protection. Providers, and especially those on technology, are also full of, at least, well, okay, there's some bad sheeps, let's say that. So if we're the good sheep, if we're the ones doing for inclusion, let's engage them proactively, bring like the concepts, what you want to do, the pro-inclusive business models to the conversation, ask for kind of no objections to try out things, sandbox them, because then things can really work. But I absolutely agree with you that this is still where Egypt is probably in the front, but more needs to happen. But we need to be the ones to help make it happen.
Thanks. Bob, you wanted to jump in?
Yeah, just for a second, Bob enabling. Just to say, there's a lot of good work on this being done in the US and other markets where there's a lot more data. And those of us who've done that, looking at algorithms and the bias in the data, it's a whole new area of consumer protection that I'm at the 10%, I'd see opportunity, but I'm very cautious because the use of data, financial institutions become brilliant at playing with data. So we have to really get up the curve quickly, and also think about Brazil is a good place where a lot of this is being done because that's great data, but it's the integrity of the data that's going to matter. And it is a form of both a tool and consumer protection. So I'm on the other side. I worry about it because it's beyond my math, but I think it's a great opportunity for us.
Can I respond?
Please. Of course.
So first on your point on algorithm biases and the risk. So of course I fully agree, and a lot of the existing legal frameworks and regulatory frameworks on AI put a lot of emphasis on the explainability, the transparency of algorithm. But I want to give you another view on this, to play a little bit the devil's advocate, which is that it's not like the manual credit assessments that we've used in the past have been very inclusive. I mean, if we have gaps in finance today, it's they've also excluded women, and in the US Black populations, etc. So to some extent, you could even see AI as offering an opportunity to correct that, to be more inclusive. So AI done well could be better, but AI done badly could be very bad. That I agree. And to the other gentleman, I fully agree with you. And I think there's a lot that we can do to support authorities to put in place the right, checks and balances. Because on the one hand, as you underlined, data-driven innovations and AI can be very powerful, and we fully agree with that, and support greater financial inclusion. But on the other hand, they do create real risk. I don't think we want to be blind. We really want to make sure that we go with the right, fiduciary protections in place. And in that context, I personally really like what the EU has done in that context. I think the legal framework is not bad at all with the classification by level of risk. The US has now moved forward with quite a lot as well. So there are models, but there's a lot that needs to be done in terms of the data infrastructure, as you were saying, the data sanity and the reliability, the data protection law and cybersecurity law and data privacy laws, the general AI laws, the regulations, the capabilities of the regulators and supervisors, because ultimately they are the ones who are going to have to check the algorithms and so on. So there's a whole protection agenda that we cannot ignore, but the two can move in parallel in a way.
Let's go back to gender. We went off on consumer protection and data and then AI a little bit, but I want to come back and one of the things that was in the compass was a sense that maybe we've reached a critical tipping point in understanding the importance of gender mainstreaming. Maybe some of that was the fact that it was the award topic last year, and at least some of the respondents are e-MFP members and in part of our ecosystem. So that may have moved the dial a bit, or it could actually be objectively measuring something that's becoming more important. But I guess do you honestly feel that we are reaching that sort of critical threshold? And two, where is the richest area for innovation in addressing the gender gap? Or put another way, where's the low-hanging fruit? Is it on pathways to leadership? Is it on girls' education? Is it on products that are really responsive to women's business needs?
All
all
of
of
the
it.
above
All of-
and
yeah.
together. That's our answer. There is no lower hanging fruit. And that's the problem. So I'll backtrack first. First, I want to start by the trends. I think the progress in women's financial inclusion is just an illusion. We have really not progressed. And that's really important to realize. You know, Findex shows a 2% decrease in the gender gap. But if you really analyze the data, and we were discussing it last year in this forum, but you know, India was driving a lot of the improvement, but in terms of usage, it hasn't improved, and the gap is still 17% in India. In sub-Saharan Africa, even by Findex definition, the gap has increased from 5 to 12%. So going the other way around, you still have a dozen countries where the gap is above 20%, and very large countries like Nigeria, Bangladesh, Côte d'Ivoire, etc. In some smaller ones too, but in India it's still 17%, Pakistan 15%, Tanzania 13%. So it hasn't improved. For me, it's an illusion, and I think we have 250 million women who are included, but say they don't use their account. So, you know, fundamentally a massive problem. Now, unfortunately, our research, so we put a lot of efforts in the last few months on that. And we come to the conclusion that there is no low-hanging fruit and there is no one solution that is a magic bullet. To the contrary, we come to the conclusion that the only way to really address these issues in countries where they're sticky and they're deep is through a systemic approach, intentional systemic approach at country level where all actors play together. And we've identified, we're going to release that research in the next few weeks or so, 6 levers that we think needs to be actioned in tandem, in parallel. And the reason for that is that underlying problems is really that you have social norms, as by now we all know in the industry. But these social norms have embedded everything in the sector. And so you can't just address one element because they will still be there in other elements and ultimately will still prevent women's access to financial services. And I'm not going to be detailed, but fundamentally we think that it's in the data infrastructure. It's in the enabling regulatory and legal environment. It's in the goals and the objective and visions for the private and the public sector. It's in the access and delivery channels and infrastructure. It's in the gender norms themselves, the attitudes, the culture, the behaviors, and it is also in consumer protection, trust, and all of this, which matter more for female clients than for males. So yeah, we need to work on all of this together, and so we need governments and private entities to all intentionally, basically, aim at closing that gap.
Would anyone like to ask or say anything on gender? I'm going to then, if not, then I'm going to we're going to spend a few minutes on green and climate smart finance, and then we're going to talk about high level challenges and opportunities, like we haven't covered enough challenges so far. This may be the most depressing fireside chat ever in the history of EMW.
Actually, we're very positive.
Are we? All right. Yes, please.
You need to ask the right question.
That's right.
Yeah, hi, it's Suzanne from the World Food Program, and this speaks to our heart, right? You heard Cheryl speak about this yesterday, and the fact that we, as the World Food Program, are prioritizing women in our cash transfer programs, digital payments. And I just wondered, like, given everything that you said, and given that you know that this is our priority, do you know any other organizations who've made a point out of prioritizing women? And is there a shift that you see, or is it still something that we need to advocate for?
So we see specific initiatives that have been taken in many different countries that have made inroads in specific parts of the equation, and they, agent networks that, for instance, have been using more female and have reached more female women in agriculture in rural areas. We see, for instance, governments. So this would be the case, for instance, well, in many countries, in fact, G2P, of course, this is at the heart of what you do, but cash transfers program that have been delivered to women or have recognized women as head of a household. All of this has made a huge difference, and many countries in Africa have done that. In some countries, say, I'll use Papua New Guinea as one example, the government has agreed to recognize different forms of IDs, recognizing that women didn't have access to the same proportionally of IDs than men. So you see measures in different jurisdictions that have had very positive impact, for sure. And of course, IDs and G2P transfers directly to women are fundamental progress elements. And I think in the pandemic, both have been moving forward very, very nicely. So, and that's exactly what you do. So that's great. But in countries where the gender gap is very significant, has been there for many years, and is rooted in gender norms, we haven't seen progress at scale. And the data show it. It has continued. So that's where we think we need really a systemic approach. And no, there's no country where we've seen that happen, but we are testing. We would like to test that approach in 3 jurisdictions, and we think Morocco and India are likely to work with us on that. Morocco has a 20% gender gap. In India, it's 17% in usage, not in access. So there we would focus on usage. And we're looking for one more country. So if you know a government and private sector organizations in a given country that are intent on doing this, tell us, because we would really like to show that it can be done and use that to replicate across the world. Yeah.
Let's talk about green and climate smart finance a bit. And one of the quotes in the Compass is something that I've seen you say in a different way, in a different context. And that is, I mean, we all know this, traditional microcredit is manifestly unsuited for the needs of particularly those that are most vulnerable to climate change, aren't they? What would you like to see? It's a huge question, I know. Rather than traditional microcredit, where should our resources and energies be most focused on helping on the resilience and adaptation side?
Yeah. So we haven't said that it is not suited. We have said that it's not suited for all adaptation needs and that it is not sufficient.
Yeah.
But in fact, it plays a critical role. So I wouldn't want people to leave with that impression that microcredit is not suited for adaptation. To the contrary, it plays a critical role.
That was my quote. The manifestly unsuited was from the Compass.
From
Yeah, but it wasn't. I wasn't quoting you there. I was quoting from the Compass. But go on.
So it's often the first line of defense after a shock. It can be useful for preemptive adaptation strategies if you need to transform your tools or your seeds, etc. And for some adaptation needs where there is a cash flow that is generated, because, for instance, you buy a new irrigation system that immediately increases your productivity, then microcredit can be very suited. But it is not suited for all sorts of adaptation needs, and it is not sufficient. So it's not suited for all because a lot of the adaptation needs of the poor will not generate cash flows and also will not generate positive impact in the short term. And it is because it is protection against shocks that may happen every 2 years or every 20 years or every 100 years. And if you need a credit to build a new flood wall around your property, there is no cash flow that's coming from that. So microcredit is not equipped the way credit assessments are done. Is not, and then it's not sufficient. Yeah. Because often the amounts are too limited, the timing is not adequate, you need insurance, you need savings, you need a whole lot more. And then I think in addition, for the very poor, we really don't think that microcredit is the right instrument. And cash transfers, adaptive cash transfers are much more important to develop. And they're not yet, even those that have the label adaptive, they're actually much more focused on shocks than on slow onset adaptation. When the temperature rises on a daily basis, there is no trigger to give a person a cash transfer, but that should happen actually because they may need to move to a new livelihood, etc. So that's another area that needs to complement the private side.
And you can't, it's not like the FSPs can be blamed for traditional microcredit being insufficient either. I mean, one of the quotes in here, right, was in the compass, so it was FSPs need to be helped to see how this relates to product design. And that was by a practitioner, right, saying this is where we need to help it, you know, we understand the challenge, but what practically do we need to be offering in financial and non-financial support to clients?
Maybe I can add to this that, you know, in reality, the microfinance sector is the most advanced in this regard by far among financial services providers, maybe with the exception of insurance, where there's still a lot of ag index insurance. But the microfinance industry is out there. It is the most advanced. Banks are much less advanced, fintechs are much less advanced, etc. But there's still so much more that needs to be done. And one of the key problems, as you were mentioning, is they themselves need to understand what are the needs of their clients, what exactly are they needing. For that, they need understanding of climate shocks, they need data. So there's a lot of capabilities, expertise that they need. And then only can they really think about what products do I need to develop to really meet these needs. And then they need to think about their own exposure, which is another thing we haven't talked about. But there's a lot of attention in the world on the climate exposure of banks. And there's a lot of modeling that goes into this and a lot of capital buffer building. But we're not doing that for microfinance institutions. And that's a real risk. And I think Pakistan, again, is a good example where it's already happened. They were wiped out because their balance sheet was wiped out. There's no insurance. There's no capital buffer that they can pull to regrow. So how are we going to do that going forward for the sector when more and more shocks will affect entire balance sheets is a key question. And I think some funders in this room, they need to think about that.
We've got a few minutes left and I want to try to finish on an upbeat. So I was going to ask you for your sort of thoughts on the last section of the paper, which was challenges and opportunities. But we've talked plenty about challenges. So I will ask you about what you're excited about, where you are seeing opportunities or what you'd like to see. But anyone in the audience who'd like to have a go at that first, either where are the big opportunities ahead, what is happening that is really exciting and impressive, please feel free to jump in now. Let's see if we can end on a high. You can think about it for a couple of minutes while Sophie has a go if you'd like. Anyone?
Let me have a go because
please, Sophie.
We're very positive. So
Please,
if this appeared as a negative chat, we failed. So we're really very
True.
positive. We actually think we're going to really see a second wave of progress, and this time not just in access. We think it's going to be much more impactful even. So, but I would say two things. One is at the highest level, precisely this ability we now have to really position the sector as a contributor to very important global development challenges, and therefore to be part of the conversation, to be really part of the center of attention at the global level. And this is how it contributes to the food security crisis, to social crisis and exclusion crisis, to the climate crisis, to the shocks and resilience needs of the world, etc. And I think we really have to get that narrative out. For me, we're not just an enabler, we're a necessary condition. A poor person cannot be empowered economically, cannot build resilience, cannot access green technologies, etc., without finance. I mean, it don't exist if you don't have finance. A woman cannot have agency without decision-making on how she spends her money. So for me, we are an essential element of the global response to all these challenges. And I think that is a very positive story, but we need to get it out there. And the second is that, everything that's happening that we talked about in terms of transformation of the sector, the fact that data, digitization, the digital footprints of the poor, all of this can be leveraged to go beyond the traditional obstacles that we faced, whether it is distance, documentation, cost. That is transforming fundamentally our ability to serve the poor with more product, better product, cheaper products, add their footprint, better tailored, etc. So I'm bullish. I'm actually very positive.
No, and so am I, and I would only add to that as well, and I've shorter experience than you do. But in my time in the set, even this is my, I think, 11th microfinance week, but even in that time here, the increased sophistication of understanding of clients' needs, the client centricity at the center, that's been talked about for a while, but it is I think a profound change. The move from a narrative based like rubric around evidence to an outcomes based and a much more quantifiable start with, does this work? Does it actually work? Not do we say it works? And that has really changed, and for real. And I think that as the sector has become a lot more complex, as it obviously has, because of the interrelation between all of these things, which are none of them are siloized, but so has the collaboration and partnership between all the stakeholders that's needed to deal with things that are staggeringly complex. So that's to be proud of, I think. And delivery, the way that technology has done certain things like delivering financial education so cheaply and easily to so many people who wouldn't have got it. So I think there is plenty. Anyone? We've got a few minutes. We started a few minutes late, so we'll take a few minutes for anyone who wants to say anything on any topic that's been covered today. Comment or question? Sure. Yep. Oh, thanks.
Yeah, so it's Suzanne again from the World Food Programme. Yeah, and it's because this is so interesting. So yeah, completely agree with your opportunities for the future. And I think from our side, we also want to underline the human centricity in design. So really putting people at the center of whatever we do. And I really liked one of the earlier sessions this morning where someone, I think it was the ILO, presented on, okay, how do we involve regulators, financial service providers in designing policies, products for people, women, and reflecting on that also in Uganda, that's what we did. We got the central bank to go to the Nakivale refugee camp and have a direct discussion with the people, the Somali refugees that were there. And because of that, they listened and understood that the things that those women wanted was livelihoods. They wanted a job, they wanted to be active. And as a result, they amended the regulations that allowed those women to become agents in their camps. So creating livelihoods, but also further developing the digital payments infrastructure there. And yeah, so I just wanted to underline that point, human-centered design, but also connecting the higher level people that might be sitting in the capital with the field and making that conversation happen.
Totally agree. That's what we mean by utility. It's really maximizing the impact, the utility for the clients, for the customers. Fully agree with that.
There was a hand over here somewhere.
I think it was not one.
Okay, but you and then yeah.
Okay. Hi. This is gonna make me sound a bit older than I am, but 15 years ago, I think the community was massively pulling the brakes on the old narrative that microfinance was fighting against poverty. And over the last 3 days, I couldn't help but thinking that with all the discussion on outcomes, we're sort of reintroducing this narrative, except that we don't call it poverty, but we've broken it down into all the multi-dimensions of it. So I'd be curious to hear how you think this is different and how confident you are that we're going to be able to draw the line and attribute results to financial inclusion, to all these many, many dimensions that we're trying now to cover.
Why don't we take both questions in one and then we'll wrap up? And that first question is, I think, for Sophie, but go on.
Thank you. I'm Malika Hamadi, University of Birmingham. So just question about something you mentioned about over-indebtedness of clients and the over-indebtedness that is going on now or upcoming. And because it is also something that I heard from other participants during these 3 days. And I was just wondering how this could be severe. And I remember a few years ago, between the financial crisis or the over-indebtedness crisis that happened in the sector between 2006, 2011 or 2012, and there were many countries affected by these over-indebtedness crisis. So and then came the social performance advocacy and also social performance rating. So this was, at that time, it was in response of these crisis, and it has tarnished the sector, in fact, the reputation of the sector. So now we are hearing again something which is going on or coming up. So if you could just maybe tell something about this, and did we learn the lessons, and are we dealt with them correctly, or what's going on?
Sure.
Cheryl Harrison from the World Food Program as well. So this fantastic panel, thank you so much. Fireside chat. It was really informative. Sophie, this is for you actually, and it's perhaps going to be uncomfortable to answer for you, but having been sort of on the inside of a lot of conversations with development banks about structured financing for social assistance programs in various different settings, it's really clear that the commitment to putting more money in women's hands, the understanding that is really an impactful way to deliver social assistance. So inclusive G2P is it's not there in most of these really large grants, and that would be one of the best ways actually to transform the way that governments provide assistance to their people. Often gender seems to be kind of just put into the social and environmental safeguards. That's where that appears, and not in the bulk of the grant. How do we change this? I mean, a lot of the evidence that's out there is generated by the World Bank, by you, by the World Bank as well, and other development banks, and yet they don't seem to be putting their money where their mouth is, shall we say, bluntly.
Okay, I'll start with the easy question. At the end, yours was the easiest, even though it looked difficult at the beginning, but we're going crescendo in terms of. So on your question, what we want to do is precisely bring the evidence to understand concretely, not with attribution as the gold standard, but with contribution as the gold standard, because financial inclusion is never going to be sufficient to reach outcomes at the development level. But what we precisely want to do is to have a very robust evidence of what we can contribute to and what not. And so it is, in a way, about answering that question. Was it meant to be a contributor to poverty reduction? And if so, how? And through which pathways? And where do we have the evidence to say, with the facts, that yes, it contributes to this and this and this and this, resilience, empowerment, agency, etc. And ultimately that contributes to probably poverty reduction and inequality reduction, etc. Ultimately, it's not about saying we're not part of the poverty response, but it is bringing the nuanced understanding of the pathways that lead our interventions to contribute, not to be sole responsible for these outcomes. And hopefully with that, we can all speak the same language in terms of what we claim we can achieve. We measure the right contributions, and we reduce or eliminate the noise about what works and what doesn't, because we will have the right, in a way, goals.
Shall I have a quick go at the second one? I mean, I accept your premise that the 06 to 12 period were a lot discrete market specific crises, and for sure there was a tarnishment of the sector. Daniel Rosas and I are just publishing next month a paper in the Oxford Review of Economic Policy where we argue it's a tour of historical crises, and in which we argue that most of the best reforms in the sector can be traced to a specific crisis, so like the SPTF as a result of those. Perhaps the legacy of the pandemic, or the legacy of those as it applies to the post-pandemic period, is that we can identify market saturation and crises faster. So maybe the noise around what's going on in Cambodia is actually a good sign that a lot of people are awake to this problem before it becomes a crisis, maybe. Then I think we're getting we really have to hurry up. Can we have a 1-minute answer for Cheryl?
Yeah, I think it's the most difficult question. So I think doing what you're doing, which is bringing the evidence about the positive impact, not just for women, but also for their household and even for the men. Secondly, maybe also understanding better at country level where the norms that underline all these decisions influence through, for instance, the legal framework or the decisions on social protection programs, etc. The criteria, the way the databases are set. For instance, the fact that women cannot be head of household still in some countries is a factor that comes from the legal framework. So understanding what are the legal obstacles and working on them in parallel. But you know, it's if you and the World Bank have not figured it out, I don't think we have the magic stand. Our main focus has been, as you know, on G2P choice, which is really to say, ultimately, you need to distribute to everybody and get them to choose how they receive the money and where they use it, and that creates incentives, as you know, to improve the system for everybody. But yeah,
you're going to have to wrap up. I'm getting Charles has moved to the front row, which is about time. Thank you, Sophie, so much for that.
No,
really
thank
appreciate.
you.
Thank you, everyone, for coming. I'm sure you can talk to us. Thank you. Keep an eye out for the CGAP paper that you mentioned, and also if you'd like a hard copy of this, there are some at the back. Good. Otherwise.